Back to Zimbabwe, where the Securities and Exchange Commission has reported a mixed 2024 financial year for the market. Now, speaking at the annual general meeting of the Securities Commission at the weekend, the two main exchanges in Zimbabwe posted diverse results, while the performance of the securities market was impacted by the overall tight macroeconomic environment. But there are growth areas in the market as well during the period under review. Let's listen.
In 2024, the global economy exhibited modest growth amid the complex interplay of issues. The International Monetary Fund, the IMF, estimated global economic growth at 3.2 for 2024, with a slight acceleration in advanced economies and a modest slowdown in emerging markets and developing economies. The global economic growth in 2024 was tempered by significant challenges, which included trade tensions, rising debt levels, and geopolitical uncertainties. Moving on to the domestic front, during 2024, the economy demonstrated resilience with an estimated GDP growth of 2%, largely driven by the mining and manufacturing sectors. The agricultural sector faced huge challenges, notably a negative growth largely attributed to El Nino effect and the El Nino-induced droughts which affected crop yields throughout the country. The overall positive growth reflects the government's concerted efforts towards economic transformation. In April 2024, the Reserve Bank of Zimbabwe introduced the gold-backed currency, ZWG, to stabilize the economy, alleviate inflationary pressures, and restore confidence in the local currency. Indeed, there were also some regulatory developments, and thus on the domestic front, efforts were made to improve the ease of doing business, as well as promoting capital market development. This led to the publication of several statutory instruments, and I'll just highlight the two. Statutory Instrument 110 of 2024, which was on the reduction of capital gains withholding tax from 4% to 2%, and suspension of capital gains tax and vesting period on listed securities. There was also SI 147 of 2024, which was on self-listing of securities exchanges. Moving to our strategic focus, the Commission continued to focus on its three programs: governance and administration, licensing, supervision, surveillance, and corporate finance and market development. On the internal focusing program, there was a significant improvement in the organization's compliance and client satisfaction levels. This moved from 57 in 2023 to 74 in 2024. The recapitalization of the Commission remained a priority, and funding amounting to ZWG 8.6 million was secured from Treasury for the purchase of employee motor vehicles. Remuneration challenges, however, continue to impact staff morale, retention, and skills attraction within the Commission. The Commission experienced financial constraints that impacted on operations and resource allocations as we review our financial performance. These challenges were driven by the subdued trading activity on the main exchange, which is the Zimbabwe Stock Exchange. The Commission recorded a surplus of 15 million ZWG on the back of revaluation gains. Operational funding support of ZWG 3 million was received from Treasury, and the Commission appreciates this continued support. I'm happy to announce that the board welcomed new members in 2024. You have already met some of the new members, commissioners, Grace Ngonidzashe Mzondo, William Magombedze, and Chaona Mshambadope. I'm also happy to announce that Commissioner Nyaradzo Tirivan was also appointed to the SEXIM board with effect from April 2025. The corporate secretary, Mrs. Cordelia Mtangadura, a lot of you may know her, left the commission on 11 November 2024. I would like to extend my sincere gratitude to Mrs. Mtangadura for her exceptional service and the dedication to the commission since 2010. Looking ahead, as we enter into the future, the Commission is aware of the fast pace of technological change, the rising complexity of financial products, and the increasing risk of cyber threats that demand that the Commission continues to evolve its regulatory approach. Guided by the anticipated National Development Strategy 2, the Commission will work on a new 5-year strategy for the period 2026 to 2030 to ensure that it continues to be relevant on investor protection, market development, and inculcating capital market and broader financial sector stability. The Commission will continue to engage with all stakeholders to develop and refine our strategies.